So what do you got for us today, Tim? Because we got the S&P 500 breaking out to record territory. You think this lasts?
Actually, on a short-term basis, yeah, I think we might see a new high. I got a chart up here now, and this is just short-term, and I'll kind of go through it. It's pretty. It's all geared toward short. Actually, what it measures is kind of measures panic in the ticks and trend, and so I kind of created indicators with it, and it's pretty simple what I look at here. But let me pull up a pen here so I can draw here a little bit. But this is just a 3-day average of the trend, and normally gets up around 1.5. You're near a short-term low. I'll just point these out, and it works. It's nothing's guaranteed, but I combine that, and we almost hit 14.5. This chart I did a couple of days ago, it got up to 1.4, and it's not an exact number, but around 1.5 you get there on a 3-day trend. Normally that shows enough panic that you may be going into a short-term low. To help support that idea, I also have a tick trend ratio and also do a 3-day average. And when you get both of them to say the same thing, in other words, both can get in bullish level, the success increases on a short-term low. And for instance, here we got the trend again around 1.5 range, and you got the tick trend ratio around minus 150. Then that picked out this low right here. This low, we didn't have the 3-day trend picking it out, but we did have the tick trend ratio pick it out. Here you just had the 5-day or 3-day trend picking it out. Here you got both of them picking it out. So I just want to point out, but here over last Friday, we had the 3-day trend get up to about 1.4, and we also got the tick trend ratio down below 150. And so we went long on that panic in the ticks and trend. We knew the downside was probably the January high, which is what this line is right here. And so that was support. We pretty much hit it today. And the downtrend's been, we don't see a sign of weakness here at all, because the market kind of goes down intraday and seems to come back pretty much on the close. And also, if you look at the Dow, we don't have it here, but Dow went up 4 days going into last Wednesday. 81% of the time, after 4 days up on the Dow will hit, at least test that previous high, if not break it, within 5 days, 81% of the time. So we're looking for another high, at least go back up and test last Wednesday's high on the S&Ps. Well, we'll break through it and keep going, don't know. But in our view, on a short-term basis, we think we'll at least do that. So we're long on, again, on Friday, we're at 29.01, I think, on the S&Ps. And so far, we're kind of holding here. We don't see any reason to get out of the position. So on a short-term basis, remain long. Go to the next chart.
Does it bother you at all, Tim, to see the, the market kind of just sitting here or even being down earlier today, knowing that September is a bad month? I think you had referenced that in your last article. I think.
Yeah, there's seasonality in November. Actually, the first day down, first day of September is down. The whole month's down. I forgot what. I have to go back and look at percentage, but a high percentage of the time, something like 70-75% of the time. So I don't think actually November is going to be up, or not November, but September is actually going to be up. But we're not going to probably be down a whole lot either. So I'm more neutral. I'm not really bearish or bullish in September here, but on a very short-term basis, I think over the next several days or week, we might go back up and test last Wednesday's high, or maybe even break it a little bit. But beyond that, I think the market could have trouble, and it could, I guess, I think September to me is more going to be a consolidation phase than anything. Also, we had April, May, June, July, and August being up. And 3 months later, the market's up 100% of the time when that has happened, going back to 1970. So we got a lot to look for, in the months ahead. It's just we have to get through September.
Well,
So,
I'm a historian, but I think I just met my match. I mean, you're coming up with some pretty good stats here that I wasn't aware of.
well, so, but yeah, I kind of look back on those stats, but September is, like this again, seasonality is just, actually August seasonality wise was not a good month. And, we broke out to new highs. So
Right.
historically, August has not been a good month, but we'll have to, wait and see here. But here's another chart. I do a lot of with ratios. Seems like, um, um, out of the more ratios, a lot of these ratios don't mean anything. So I have to go back in time to figure out and look at them and see what they actually do. Here's a tick VIX ratio, 4-day moving average, and kind of said the same thing as a tick trend ratio did. Uh, this chart was made yesterday, but anyhow, the tick VIX ratio with a 4-day moving average is getting bullish territory, suggesting that we're at a short-term low. And I pointed out the previous ones going back for the last 6, 7, or actually last 9 months, and they seem to work out pretty well. Back in picked out this consolidation right before the uprise. This big mess going on right in here. The said, we're at a short-term low, and it got kind of messy basically back in July, and that turned out to be a decent low, and we're back here again. So we may go back down to the January high, which we pretty much got there today, and we're probably going to find support according to this ratio. So I'm thinking, well, how high is high? Do you have a indicator for that? Actually, I do. So, well, these three different indicators. You got the tick VIX ratio, you got the tick trend ratio, and you got the 3-day trend, all at near bullish levels. But how do you pick the next short-term high? Well, the tick trend ratio also helps with that high. Is also kind of manages the exuberance of the move along with the panic of the move. Here, I pointed out going back, it looks like about 10 months. The bottom window here is the tick trend ratio again with the 3-day moving average. But if you get above around 300, it's usually not a good sign. We haven't got there at that last high, even though the market's consolidated here. It did get in bullish territory down here, but it never got up in the bearish territory. I didn't pick out every high, but it picked out that little minor August high. We had a week or two of consolidation. The June high, a little bit early, but it pretty much saying you were getting too exuberant to the upside. You got a decent consolidation. In the May high, market went sideways for looks like about 3 weeks. Didn't quite pick out this high. There's a little minor high there. It got too exuberant. We had a big down day, right there. And I kind of picked out these highs. Actually, get two indicators, saying that was probably going to be an important high because it got too exuberant, twice in a row there. A little minor high here when we picked out a consolidation. This was a fail right there. The market just kept trekking up. That one here picked out the consolidation phase. And so what I'm looking for is if the market got pretty much oversold, what I call kind of a panic level according to ticks and trends, it may on this next rally up get too exuberant to the upside. If we get above plus 300 on the tick trend ratio, 3-day average, it may step out of that position if I don't find anything else to have a reason to sell. So that's what I'm kind of looking for on a short-term basis. So if we get a decent pop up here and things get too exuberant, I'll probably step out of that position. How high is high? I don't know. I thought we might get up to 3,000. I think that's pretty optimistic, but we may get above the previous high, 29, 25 range, maybe, possibly. That's, I don't have a crystal ball, but I do have my indicators, and when they do get overbought, if they do get overbought on this next rally, I'll just step out. Um, this is this is a long-term chart. The only reason why I'm bringing this up is it's kind of a momentum chart. Normally, markets don't peak on RSIs. What I'm trying to say here, this peak we had back in 2015, RSI, it was, you know, 60 range. It peaked in 60 range at this major high back in 2011. It did touch 70 there, but most of the time it was below 70. This major high back in 2007, you know, it peaked below 70. So when they say RSI is overbought at above plus 70, longer term, that's bullish. On a short term basis, you could have a consolidation. But back on last Friday, we had the RSI hit 71.89. That's usually not a bearish sign. That's a sign of momentum to the upside. And I point out some other times when it gets above 80, usually that's a lot of times it's initiation of a continuation of the uptrend. If you notice here, when we hit 80 range on the RSI, we did have a high here. What happened? I can't really erase that. But anyhow, what I'm saying here, RSI hit 71.89 on Friday. You can have consolidations, but that's never the end of the up move. So we might stumble through September, but in my view, we won't have anything significant to the downside because of the RSI did get above 70. Like I said, when RSI is above 70 for the first time in 7 months, while above the 200-day moving average, 2 weeks later, the market's higher 94% of the time. So, what I'm saying is market may go up, hit a high, come right back down to the January high and go right back up again. That's what I'm thinking is going to happen. So momentum is pretty strong here. So, I'm not really bearish at all, especially with the next 3 months being 100% chance of being higher. So we could have some minor pullbacks, but I don't think anything significant.
Hey, Tim, when you're looking at the S&P 500, does it matter to you what's leading? I mean, if you're looking at the various sectors, does it bother you if the strength is being led by some of the defensive areas instead of more aggressive areas? Does that enter into your trading strategy at all?
No, not really. I kind of look at how I look at the markets. I look for panics and exuberance, and for the short-term trading, then momentum has a lot to do with that. I do quite a bit with the Bollinger Bands and stuff, but I really don't break it down into what's leading the market and stuff. Maybe I should. I haven't. Technical analysis is just one big learning experience because you learn something every week. At least I do. At least I try to do anyhow. So maybe down the road I'll start looking into that if it makes sense. It probably does make sense, but to me, I'm always I'm a math major in college, and so I'm always looking for statistics type things. So, but
I love it. I love it. Don't stop. Oh, I like hearing all these stats for sure. Do you have you been? You recognize that we're in a strong market and we got a lot of momentum going forward. Do you short the market during these periods, or are you only looking for long entries?
uh, depends how exuberant it gets, I guess. If you get the I think my next chart here is, I mean, these times when you get the equity put call ratio readings, which is what the CPC is or CPCE is, the equity put call ratio readings, I take a 3-day average, and we did hit that on this last high last week, and that's kind of exuberance to the upside. Um, right now I really don't have a desire to short the market. I think if the market does pull back, if we get to panic, I'll just keep looking for the long side because I don't think anything worthwhile to the downside. I don't. The way I see it right now, that may change over the next couple of weeks, but I don't see a 5% slam to the downside. Maybe 3% at the most, but as it sits right now, I think we'll we'll hit some new highs. We'll come back and test some previous highs, like the January high, and that's about the worst I expect.
Hmm.
Um, but the equity put call ratio readings do suggest that we're going to have a hard time kind of going higher here, because the last few times we hit the 3-day average of the equity put call ratio readings getting below 0.55, the market has struggled, and I point that out right here and right here. We did have a consolidation there and has a consolidation there. So, so the upside is not going to be huge here, even though I'm long the market. If I can make a percent or two, I'm going to be happy with that. So,
Yeah, I
um,
will say, just looking at that chart, the readings that you had back in June below 0.55, and then also back in March when you went below that 0.55 level, both of those occurred with price resistance. The S&P up against price resistance, and I noticed both of the readings that you saw back in December, or even the ones that went into January that were well below 0.55, was when the market was in breakout territory. So I'm wondering, with us being in breakout territory here, whether or not, we'll get the pullback that we saw the last two times. It seems to me like, we've already made that breakout, and technically, I think that would attract more buyers. So maybe we kind of overlook that and move higher like we did back in December and January.
December. Oh, I mean, where we just consolidate the moves and stuff, and
Yes,
and
instead of the
and
selling. Yep.
then start working higher. Yeah, that's what I'm thinking is going to happen here. I think we go up here and maybe we hit a new high, get everybody excited again, and some of my indicators that tech trend ratio gets above plus 300 or something. I'll think I'll pitch it back, and maybe we'll find support back around 28.75, or especially if we get. Uh, Normally, you get panics from my experience. You get panics and ticks and trend at support when there's even when everybody thinks there's a support area. If you don't get panic on it, the market usually follows right through that. So if the market does produce panic and you have a support area, chances are that support's going to hold. That's my point.
Mm-hmm.
So, and I've seen big declines to continue where the ticks and trend don't panic at all. And because everybody's evidently comfortable being long, and they think it's just a pullback in an uptrend. And those type of pullbacks where you don't get panics and ticks and trend turn out sometimes to be disastrous. So we'll have to see how this trade turns out. But for right now, I'm long, and it still looks okay, and I don't see a whoops. Okay, that might be my four graphs, I guess. But I can take questions, and we can go from there.
Okay. Do you trade individual stocks, or do you only trade the S&P?
I trade pretty much everything. I'm kind of into the gold stocks right now. They're super cheap. The sentiment, the COT on the commercials a couple of weeks ago, I think last week we're at 7K short, but the week before I think it was 16 minus 16 commercials. Gold commercials were short, only about uh, 1600 short, which is the lowest it's been since going back in I think November 2015. I think we're around 3,000 K short back at that time. That was a major low back in gold. So commercials, um, the way I'm reading them anyhow, are extremely bullish in here, and the bullish levels we had last seen at the last major low of 2015. So even though gold stocks are kind of got beat up here over the last month here, um, I'm actually on the bullish side. There's actually some of the uh, gold stocks haven't really moved up yet, but they are drawing bullish flags and stuff like that, and those are the ones I'm trying to pick out. So
So does it not bother you? I mean, I've had a friendly debate ongoing here, both with Aaron and Greg Schnell. More so with Greg because I think he's more of a longer term. He looks at gold a little bit more longer term, and he really is bullish gold right now. So he kind of agrees, I think, more with what you're saying, the way it lines. For me, the reason that I argue against gold is I'm a momentum trader, and right now, clearly, the momentum in gold has been to the downside. If you look at, say, the GLD and compare it to the S&P 500, it has literally been a ski slope since April to
Yeah.
the downside. And if I'm trying to outperform the S&P 500, I want to try and get into areas that's outperforming, not underperforming. So I don't disagree that gold could go higher. I guess from my perspective, I'd want to see it begin to start outperforming before I would be more interested.
Yeah, that's true. If you're a momentum trader, you're standing aside. But if you're a sentiment trader, you're looking at the product. And I do a little bit of both. Sentiment, because I do put call ratio readings, I do COT readings and stuff. But sentiment on gold, sentiment trader, which I ascribe to, has a lot of indicators that sentiment wise on gold is 27-year lows that we haven't reached in the last 27 years. So if you're a sentiment type person, gold, relatively speaking, is sentiment wise is very good. We'll have to see. Nothing works all the time,
Mm-hmm.
but you know, at the moment, there's no momentum. The momentum's obviously down, and I guess you're catching a falling knife here, as far as gold is concerned. But the sentiment has reached extremes that haven't seen in years, so I think it's a good opportunity. So
Yeah, I would
could be
just
wrong.
I would add too, your from a seasonality perspective, gold has outperformed the S&P 500 of roughly 2/3 of all the Augusts and Septembers going back over the last 20 years, and their average return, the average outperformance by gold versus the S&P 500 during the months of August and September have been almost 5%. So there's definitely some historical information that backs up, what you're saying from a sentiment perspective as well. So
Yeah, that's right. Actually, August, which has been terrible for gold, and September is one of the two better months gold for the whole year.
yeah,
So, so I don't know what September is going to be before the month's out, but we'll have to wait and see if things start to gear up here. So, but that's one thing I like. But uh, getting back to the S&Ps, we're kind of coming back here, and we got some downtick readings. So,
Hey, I do have a question, Tim, from the chat room. They want to know if you always use 3-day targets, the 3-day.
I mean, three period moving averages.
Yes, that must be what it is.
Well, actually, I go back and look, kind of trade it. There's other ones that work on 4 days, but 3 days seems, from my experiences, to work out the best. And I've been doing this for a number of years. I've tried 10-day, 5-day, 7-day, but 3-day seems to work for the best for right now. What's uh, on these indicators, I notice over time they kind of change a little bit. So what's working right now may change a year from now. So a year from now, 4 may work better. And it's a gradual change. What happens, the 3 starts working less, and the 4-day or the 4 period moving average starts to work better. So I'll start to switch over to 4. It doesn't abruptly change from a moving average of 3 to 4 overnight. So, but right now, the 3 period moving average of the tick trend ratio works at the moment the best. So,
All right, excellent.
I've got one other question for you, and I'm going to pull up a chart and just kind of get your thoughts on it. You may not even care, but we'll take a look at it anyway.
right.
But when you look at the S&P 500, and here's the chart. Here on the top, I have the S&P 500. This relates to the poll, and we're going to bring up the poll later in the show. But maybe this will give everyone some food for thought before they fill out their answer. But the S&P 500, since about May, and of course, a lot of this has to do with the trade fears and war and maybe the dollar and maybe a lot of different things. But here you can see the S&P 500 since May has been going higher. The German DAX has been going lower. The Shanghai Composite in China has been going lower. Here's your Hang Seng going lower. The Nikkei has been pretty much flat. And over in India, we've actually seen some pretty good strength. But does it bother you? Because I'm bullish the S&P 500 as well. I'm pretty I would say I'm very bullish the S&P 500. But does it bother you at all that other markets from around the world are not participating in this rally?
I think I think it's actually for us a plus because I think some of the money's coming here.
Yeah.
If they're not performing, over there, they're coming to our markets. So it could end badly, in a few years from now. But right now, I think it's a good it's a it's a good thing. I don't know how high is high we're going to go, but there's a lot of historical stuff that maybe in 2019 we could have some trouble, but there's really I don't see any trouble other than minor consolidations this year. And I think my point of view is we're only halfway done to the upside. I think we could reach 16% for the year. That's a possibility. So I'm kind of bullish beyond this month. October could find a low where we start breaking higher, because statistics show that during midterm elections, the market doesn't bottom in November; it bottoms actually in October. So I think October would be the time that the uptrend actually starts, and it may not start too far from where we are right now. The trouble is, we may not move very much between now and October. Mm-hmm. But if we get some panic in October, that'd be the time to start long. And I think it looks, like I said, November or September rather is probably not going to be a hugely bad month, but it's not going to be a hugely great month either.
So. Yeah, October over the last 20 years, a lot of folks may not realize it, but October has been the best month for the S&P 500 over the last 20 years. And it gets a bad name because of 1987 and 1929. But if you throw out those outliers, October historically has not been a particularly bad month. In fact, it's been a fairly bullish month, and it starts off that fourth quarter when, of course, the fourth quarter has been the best quarter for the market going back many, many years. So I think that we could be on the verge of going a lot higher. One final question for you before you go, and this has been great having you on here, Tim.
Thank you.
Do you use your short-term signals do you use them for leverage? Do you trade options at all?
Yeah, I do. I actually the best signals I try to look for, and actually we're starting to enter into the best option period, is usually September, October, and November for option trading. And what I try to do is find panic, preferably going into expiration week, and I'll actually buy expiring options for that week. So I'm kind of maybe that's too speculative, but I've had huge gains made where I'm out of the money a little bit, and so yeah, I do. And ticks and trend is a great tool to define panic, because that's when panic hits. You're hitting a short-term low. But yeah, I do SPI or SPY options.
All right, I do want to point everyone, if you go to the blog articles at the top of the member dashboard and click on that, and then go to the right-hand side and scroll down under top advisors corner, that's where you'll find some articles from Tim. You definitely want to check it out, especially if you're a short-term trader. I think that you've shared some great wisdom with everybody today, Tim, and certainly appreciate you coming on Market Watchers Live with us today.